Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I'd like to review Kadena, and we've already gone over Kadena before. You can go ahead and look for my How I Will Trade Kadena video. That's going to give you some insights in how I personally will trade Kadena, but I'm going to summarize some of the major parts of that video in this video and give an update to it. So please stick around. If you do want to check out the other video, it will go into a little bit more depth and you can check out the link below in the description and consider it kind of a part one to this one. But basically, I've been trading Kadena ever since it was 36 cents, way down here. And since then, it's basically skyrocketed. Let's see, it was approximately 5,000% up before I, finally sold and kind of got out of the market on it. I sold here and here and here, and then we've just been riding the way down. Let's see where are we now? We're about 72% down, 75%, 80% from the top. So this thing has retraced significantly. I do have log scale on, logarithmic scale, so that makes kind of an exaggeration on this chart, but you can understand that um, this is what the chart looks like in regular linear price action, okay? So this thing had a blow off top and then it came 80%, all the way down. And I do believe that we've reached a floor and that probably there's not much longer for, you know, this coin to be, to be squeezing out losses if you happen to be buying at the top. Hopefully your fortunes turn around. Lucky for me, I bought here at the bottom. And so, again, we're just right here. Now, in the last episode, I did point out a couple things that I would like to rehash. One of them is that, we had these type of fractals going on. And I drew these fractals from the beginning of the chart just to show you what it would look like if they, were to carry forward. Now, this is just a theory of the psychology of the market. You can go ahead and check out that first video. I'll go into more depth, but let's just assume that this is valid, okay? Well, I just want to point out how we can see this price action is following pretty closely to my fractal, right? This projection based upon previous market psychology of specific traders in Kadena, right? So this is unique to Kadena. There's no way to use this type of trading pattern for any other coin. So unlike harmonics, unlike other methods of trading, fractal trading is very artistic. It's very risky. And to be honest, I don't recommend it. I only recommend using it as confluence with other more traditional methods so that if you do start dipping down those type of things, you just have a little bit more confidence that you're on the right track. And, I believe it was over a week ago that we were talking about Kadena, like way back here. And if you zoom in, people were saying, "Oh, we're gonna skyrocket. Kadena's bottomed, and it's just got freshly listed, and we're gonna skyrocket." And I said, "Wait a second, guys. If you take a look at this fractal, and I've lined up, the areas pretty well with the past psychology, it suggests that Kadena may want to do a bigger retrace than what the average market would expect. This is the typical behavior of Kadena. I've traded it since 36 cents. I saw what it did here. I saw what it did here, 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 and here. And it really takes its time, okay? This, of course, was when it was, just listed and, you know, those VCs shenanigans, they take all the money out of it. And some type of psychology gets built into the chart. It continues, like certain patterns continue because certain traders stick around, certain bots get established, and an algorithm sort of gets set for the smart money, and then for the general public as well, which whose natural behavior contributes to that algorithm. Simply, it's the people who continue to stay in the market and continue to trade specific coins, their fears and their greed, that the type of fear and the type of greed that they have at different price points, at different relative price points, doesn't change. They're still the same people they always were, whether we're up here or whether we're down here. Their psychology works the same, and so that's how I can make this type of a projection. And what I was thinking is that nope, nope, we're not just going to have a lift off, okay? Everybody thinks that because we're at, great levels, but I really think that we have a little ways to go down more before Kadena squeezes out all of the liquidity and all of the, fears and whatever that's built into the psychology of this market. And there we go. So this has been the last week. You can watch it. And it's almost followed the fractal perfectly. And so then here we are, right? Still going down here. And why do I have two patterns on here, this blue one and this purple one? It's because I'm not really sure which one's at play, okay? Like this is the maximum of the fractal that I'm using, and here's here's the blue one, and it kind of follows this path. Then there's a major dip, and then you can see the price action is above here, it's below here, it's above here. So I'm just taking the average of the price action. It's above here, it's below here. And I'm taking a more conservative fit, and I'm taking a more liberal fit to try to see high ranges and low ranges. And I'm a little bit emphasizing the low ranges a little bit more, just to be a little bit more conservative. If we do start popping up bullishly, that would be great. But at the same time, I don't want to miss any opportunities to buy at really low levels, just in case this does play out, right? Sort of like my review of Credo, this fractal implies that we're going to go lower. And Pareto's fractal implies that we're going to go lower. And Bitcoin's fractals imply that we're going to go lower. So I'm starting to see a pattern in the fractals of all of these coins, which are taken from different points in their lives, in their coin life. And when I'm overlapping them, they all seem to be pointing towards a huge market correction. And that's just a very eerie coincidence, okay? It's a very eerie coincidence. I am 100% open-minded to the possibility that we could just skyrocket right now. But Pareto, Kadena, Bitcoin, all these different coins are telling me that the algorithm that's built into them, which is just a combination of human psychology, bots, and professional traders, using professional tactics like fibs and everything else, like all that contributes to a generalized algorithm, which points to a suggestion that we may have a bigger dip. Now, anything bullish in the market could cause us to actually break those algorithms. These algorithms, these fractals, are broken all of the time. They are not fate. Do not trade off fractals. Simply use it as confluence. That if you start to see it breaking down, and I'm starting to see it kind of break down, that you might want to hedge. You might want to hedge your position and not just dismiss this possibility. You might just want to hedge your position to reconsider and to be open-minded to a possibility of, being able to buy in at these type of low values, even if you're also DCAing in at these value zones, that might be a little bit higher, right? And of course, you might have been ready to buy in here if you had broken, the previous high or whatever, and you could just buy in when it takes off. So let's say that none of this price action takes place, then you just ignore it. You just buy in when you have a confirmation of bullishness, right? But what I'm seeing based upon the fractals and what I'm seeing playing out is a correction based upon perhaps overheating, right? It was an extremely exciting coin for a while. It got way overheated at a blow off top, and maybe it has to come down, maybe to 90% down, not just 80% down. And so we're just taking a look at that. Let me go ahead and show you my diagonals that I've drawn in. So these are the diagonals that I use, the origin lines that I set for Kadena. And just by coincidence, these fractals also line up with a retouch of the macro channels, the macro origin line channels that I've established here. And if it was really a very bearish reset, then I would consider this first channel. If it was kind of just a moderate reset, then I would consider this channel. And of course, if we're just bullish, like if the market just goes, in the next month and we're just, we just kick butt, then maybe these two channels are completely invalidated. And maybe we actually have a channel like this, right? You can see this price action even. That's very interesting, right? Look at this price action right here, right on that diagonal. Look at this price action, it seems to be interacting with this diagonal. And look at this wick, right? It reached all the way up to the top. And look, we're testing the bottom of it. But if I look at this closer, in my opinion, it does look like we're breaking down from whatever channel this was. It looks like we're breaking down from it. And if we're breaking down from it, then we're going to test perhaps the mid channel. Where's the mid channel? You see it right here, right? You see it on these wicks. You see it on this wick, right? So the mid channel, in my mind, would be somewhere around here, which would put our price action in this range, which means that I want to keep these channels in my consideration. And I'm not trying to be bearish. I'm not trying to be bullish or bearish. I don't really care about those type of things. I only care about, making, valid considerations and then setting up invalidations for them. So if we get on top of this diagonal, I'm going to consider that this fractal is probably broken, okay? Especially this ultra bearish version. If we get on top of this diagonal, I'm going to think, you know what? I probably need to get in. We're no longer breaking down from this. We're no longer following this pattern. We're on top of it. This pattern might be concentrated, and the pump maybe is going to come sooner than we expect. And if we get up above this price action, definitely I'll say something new is happening, and that's a kind of a bullish confirmation, especially if we got up here, right? So if we see like $9 or $11, then I'm probably going to get back into this asset earlier than waiting down here. But and let me go ahead and put my buy and sell boxes on. But if we're just in this area, I don't consider this a good value. I consider this just a middle region. And again, let me take log off just to show you what this looks like. Okay. So now you can see, let me take off my diagonals. Now you can see that, and by the way, these fractals, they don't work on linear here because I took it on a logarithmic fractal. So just ignore the fractals also, turn those off. There we go, that's better. So these price points are valid though. And you can see we're really in this type of kind of middle region of this price action. Now, I don't know how the market's going to go. I don't know if we're going to have another blow off top this year, right? So really, I'm considering just this region, right? Just for trading, I'm considering kind of this region, right? Because I don't want to be too greedy. And at the same time, it doesn't really make sense to be, too bearish. I don't think it's going to go back to these prices or anything. I don't think the coin's dying, right? We're just having a very bearish retrace because we had a very bullish blow off top. And so in the area where we're probably going to be trading for a while this all cools down and builds back up, this is probably going to be our trading range. And then probably the center of it is more and more our real trading range. We're just in the middle right here. Where do I want to buy? I want to buy in the lower half of this box, if at all possible. Now, we did get a couple chances to buy there. Way back here, way back here, way back here. And if we're coming down again, we may have another chance to buy in this box. I'm probably going to load up on some Kadena in this area, right? And then if the fractals end up playing out, let me go ahead and turn auto log scale back on. And then we can take a look at our fractals again because they are made on the log scale. Let me go ahead and, wow, okay. See, that's the problem with switching between log scale and linear. Everything gets multiplied by 1,000. So let's see. Just tighten this up a bit. Actually, I don't need this box. Get rid of that. So if this fractal does end up playing out, I'm simply going to have a second box here. And then if we have an ultra bearish, market where nuclear war breaks out, there's a global recession, or just something happens. The stock markets crash, right? Or the Fed increases interest rates, you know, at a level that nobody expected because just for some reason they had to do that, right? Then I would also want to have some buying options down here, along this support. I don't consider this very strong support right here, but we did wick down to it and bounce off of it pretty nicely. So it does work as support. But, if we come back down to it and test it a couple times, I'm just thinking maybe we could break down. And then this is a pretty good support, right? This is a pretty good support. So we'll probably sit on top of that because honestly, going down lower than 90% is kind of insane. And I think anytime you're in this, 80% down to 95% down, it's a good time to buy a coin as long as that project is still alive and it's a good project and you believe in what they're doing. A lot of this dump is probably just coming off of the listing. I think it was listed on Binance or something. And so people are just taking their profit. A lot of people hodled this coin from early down in these prices. And, they're taking their profit all the way back down. And again, if they were like me buying at like 36 cents, even if they bought at 50 cents or 75 cents or a dollar or $1.50 or $2, $2.50, $3, $3.50, all of these people are still in profit. All of them are still in profit. And let's say that they held, right? Let's say that they held, they hodled and they didn't sell up here and they said, no, I'm going to hodl until we're $1,000. And then they realized, uh-oh, we're just going down. And so they kept holding and they kept holding. Well, the reason why the price keeps going down is because a lot of these guys didn't sell the top. And as the economy gets worse, as, uncertainty is building in the market, based upon all these different global and economic, things going on, they've just had to sell a little bit more and more, to pay their rent, to pay their gas bills, to pay, all these things, the rising cost of food, etc. And maybe they just never expected to have to wait this long because this was basically a straight line, and this is taking quite a bit longer. And so, they're just slowly selling their coins that they bought down here. And that means it's highly realistic that we could come back down into the kind of the middle of this price action and even test a little bit below the middle, it's possible. So these are very realistic expectations. And again, you know, on linear, it's not really the middle. It's like the bottom. We're like, let's see, what would this be? All the way down here would be, 90, almost 95% down, right? So that's quite extreme. I don't really expect that we'll get there. The majority of my buy-ins will probably be in these zones. And if we start making bullish turnaround, then I do consider us to be in a DCA area right now. It's not the best one. And then if we get on top of this area, then I would consider, coming back into the market. But if you buy in these areas, then good for you, or if you already bought in them, good for you. And you might want to consider to start taking profit, like right here, right here. And then finally, kind of targeting taking a lot of profit up here because you don't know how it's going to go, right? So you just want to take profit along the way. If we get above that, you can get back in, or you could, wait till this high. It's up to you how long you want to hold this. Usually when Kadena explodes, it explodes quite well, right? So you might not even want to sell. You might not even want to sell. If you can hold for another year, if you can hold for 2 years, you might want to just hold on to this asset because it is a good project. However, just don't expect that it's going to have the same type of gains that it did in the past. There was a lot of kind of layer one enthusiasm, and people were looking for Ethereum alternatives, and they were suggesting Kadena could be one of them. But, we've also, the market has also come to different conclusions. It's been looking at different coins like AVAX and Luna and all these other ones. So don't necessarily expect the same type of explosive growth. It might just be more kind of gentle growth from now on, and it might take months and months, which is why these guys are selling, right? They know that. It could take months and months, and the price could continue to trickle down for a little while. If it does trickle down to these levels, I do consider those to be good buy zones. $2 to $3, excellent buy zone. You know, $4 to 4.50, really good buy zone. And $5, that's a great buy zone also. And then in $6, it's kind of meh. You don't know when you're going to get your money back. Take a while. And then, if you're going to wait around for like 8 or 9 or $10, honestly, I would just recommend going with other coins because again, you don't know how long this could play out, right? It could just take its sweet time. It could do this type of thing, right? And that could take a couple years, as it takes all that time to work its way out. There's been many, many coins that did that. There's many coins that took like a couple years before they reached another explosive growth or that they had a first explosive growth. And so you have to understand that you should take your profit when you can because there could be a downturn that lasts a year or two. And yep, that's my advice. So that's your alpha for the day. Stay safe, guys, and happy trading.